Hello, welcome back to my channel. It's still Misha representing art Trade with Misha, here to take you through some back testing. But before we get started, I'm gonna share with you my mantra. My mantra is success is my duty, obligation, and responsibility. If you wanna be successful in any field, you should always make it your duty, obligation, and a responsibility because success is individual. It's individual. So let's dive into today's study. Um, my trading pair is GBP US dollar, and this is a 4-hour chart on TradingView. Here we had a break in market structure. Price took out this high and closed above, but after price taking out this high, we formed a swing high. Price formed a swing high. We had this bearish candle closing below this last up close candle. So we can consider this as a change in state of delivery, and this last up close candle as our bearish order block. But if you're not yet sure of whether the market sentiment has changed at this particular moment in time, we had price trading back up, forming a failure swing. This is a failure swing because price formed another swing high that failed to take out this previous swing high. But look closely what happened here. We had a fair value gap in form of a BC. BC is a buy side imbalance, sell side inefficiency. So at this price leg, price delivered in only one direction, that is buy side delivery, leaving a fair value gap. But after price making this failure swing, price came and closed below this fair value gap that was left initially. So according to me, I would consider this as an inversion fair value gap. So the moment you see an inversion fair value gap, it also signifies a change in market structure or a change of character. That is why we had price closing below, then we had price trading back into the inversion fair value gap, and it offered resistance going into discount. So in discount, we had a pool of sell side liquidity that was resting below these lows, and this low price came, swept out the sell side liquidity that was resting below, went ahead, took out this high. This is a swing high. Price took out a swing high and closed above it. So I would consider this as a market structure shift, because if you're trading, you have to live in the moment, in the now moment. You trade what the market is printing at that particular moment in time. We trade the present moment, not in future or in the past. Fine, the past shows us the print, but you have to participate according to what price is presenting to us. Price took out sell side, took out this high, closing above. So this was a market structure shift, bullish. Still price formed a swing low, took out sell side liquidity. We had a new break in market structure, leaving a bullish order block. These two down close consecutive candles, they are referred to as bullish order blocks. We had a retracement into the order blocks, forming a new swing low. Then we had a new break in market structure. Price had a very significant move or an expansion, a very huge expansion to the upside before establishing new structures. Here, price established a new structure by forming a new swing low. Then price came and closed back above. Price established a new structure by forming this new swing low. We still had a break higher. The order flow was still so bullish. Price left a fair value gap in form of as BC. BC is a buy side imbalance, sell side inefficiency. Price was delivered in only one direction. So we had a retracement into the fair value gap. The price formed a new swing low. So if we are bullish, the moment price establishes or forms a new swing low, expect it to continue expanding higher. We had it expanding, breaking this previous high. Market structure break left a swing high. We had a retracement into discount. These consecutive down close candles before this impulsive move higher, we consider this as a bullish order block. Still, we had a fair value gap in here. We also had a CB in here. So when we combine this CB and this BC, this is termed as a balance price range in here. So we had price retracing back into discount, forming a new swing low. We had it revisiting or return to order block. This was a bearish order block. Took out buy side liquidity, still dropped into a discount. We had sell side liquidity resting about below this low. Price took out sell side liquidity, then before establishing new structure, breaking higher. So after price breaking higher, we had a retracement. We had a retracement in here, return into a discount. We had sell side liquidity resting below. This is a liquidity sweep. This week trading below this. That is not a break in market structure, but it is a liquidity sweep or liquidity grab. Sell side liquidity was taken out. A new swing low established. We had a little small consolidation in here, then formed a new swing low. So we had a failure swing in here before price expanding lower, taking out this previous high. So this was a valid break in market structure, bullish. After breaking market structure, we had price trading lower. We had a bearish momentum in here or a bearish order flow. Price came closed below the last swing low that was formed before this impulsive move higher. Since price closed below this, we will consider this as a market structure shift, or you may term it as a change in state of delivery or a change in character, showing us that at this particular moment in time, the order flow has now changed into a bearish order flow. So after price closing below, we had it retrace back into a CB. A CB is a sell side imbalance. A CB is a sell side imbalance, buy side inefficiency. So we had price retracing back into a CB. We had a break in market structure in here. Price left a breaker. This is a bearish breaker. Why is it a bearish breaker? We had this swing high. We had this swing low. Price formed a higher high, but price again came back and closed below this swing low, making these two consecutive down close candles a valid breaker. So after price breaking out, we had a retracement back into the breaker. Then we had price still establishing a new structure by breaking lower, formed a new swing low in here. Price formed a new swing low. Price formed a new swing low. We had some failure swing here. Failure swing, we consider them as engineered liquidity because market only moves for two different purposes, that is balancing inefficient price action and taking out liquidity in the marketplace, that is buy side and sell side liquidity. So here price left these swing lows, so that was a pool of liquidity left. We had a market structure shift because price came and took out this last high that was formed before. Price came, took out sell side liquidity, closed back again into the range, forming a new swing low before breaking higher, and the story continues. Hope this was insightful. Hoping to share with you more backtesting videos. Don't forget to like, subscribe to my channel. See you at the top. Thank you.